Hello guys. A couple of weeks ago I created this video where I showed you my expectations for all the major currency pairs and the commodities and the indices that I cover at snail-trading.com. Now after 2 weeks I see that the trends are actually developing according to my expectations, but unfortunately I'm still not able to publish my lower time frame Elliott Wave charts because I'm not 100% sure of the internal waves of all those instruments at the current point. So in today's video I'm gonna just show you again my weekly charts, but I'm also gonna show you my daily charts as I'm pretty confident that my counts are correct on the daily charts too. So let's start from the weekly charts. I see here this is the Australian dollar, and this is the chart, and we see that compared to the chart from 2 weeks ago, there are no big developments actually in this particular pair. Here we see this was the bounce of the week that I created the week I was talking on the previous video, and the next week was bearish, and last week created a dodgy candle. So the situation remains the same. I expect this scenario to play out, so I'm expecting a wave 3 to unfold to the upside pretty soon, but prices are still below all the weekly SMAs, and there is no clear trend at the current point. Prices are moving sideways. Last week an attempt was made to move above the SMAs, but prices were rejected, and they closed just above the low of the previous week. Last week what happened was that we had an initial decline which moved below the low of that week. Here we see, but prices reversed to the upside again, and I believe that from here we will now see the uptrend developing. Going on the daily chart, we see all the internal counting of those waves, and we see that despite the decline that occurred last Thursday, on Friday, and after the NFP report, the US dollar weakened across the board, and we saw a pretty strong rebound. So this decline below the red 21-day SMA was rejected, and we're closing the week above the SMA. Also, this pattern here looks like a piercing line pattern, which is a bullish reversal pattern, but we're gonna need a bullish candle to follow. I mean, Monday's candle should be bullish in order for this pattern to get confirmed. If it does get confirmed, then that will give us more confidence in this count, and we will be expecting the uptrend to continue. This was this price here was my confirmation point for the bullish reversal. It wasn't reached since then, but now we can safely move this here. So if prices finally manage to move beyond the 0.7515 level, this bullish reversal will be confirmed, and we will be looking for a new for a new uptrend to start. Also, in terms of Fibonacci analysis on the latest waves of the pair, we see that although we had a slight drop below the 61.8% retracement of this wave 1, prices bounced after that. We had a rally. The rally was rejected at the 144-day SMA, and we had another bearish reversal here, but again close to that Fibonacci level, another rebound followed. All that that kind of price action suggests that the broader scenario is correct, and we're probably heading into a new bull trend pretty soon. Let's go to euro dollar, which is actually the pair that is most traded and most people are interested in. I was talking about this this candle here of the previous week, which some people were fast to call it a shooting star. It looks like a shooting star indeed, but a bearish candle has to follow this formation in order for the shooting star to be confirmed. Instead, the pair moved higher as I expected, and this pattern now is invalidated. It does not represent a shooting star, and also we have after this rejection of prices at the 144-week SMA, we have a continuation of the bull trend and a close quite above this SMA, which is definitely a bullish sign for the euro. Going to the daily chart, we see that prices remain above all the SMAs, and we have a continuation of the uptrend, but we still have to see this high. We still wait for prices to move above this high here to confirm that wave 5 has actually ended here. I'm not sure if prices will continue immediately to the upside. This may be some kind of very not that common correction, something like A, B, C, A, B, C, and then A, B, C, and then to continue from here. But in terms of momentum, I see that the pair is quite bullish, so I would expect the bull trend to develop from here to the upside without any significant correction to the downside. Moving on to the British pound, here things are a little different. I mean, while across the board the US dollar is pretty weak, we see that on this particular pair, it didn't really manage to rally too much after the disappointing NFP report, which suggests that although the US dollar is weak, the British pound is weaker, and therefore there is a great chance that we're going to see a larger correction in the British pound before the bull trend here is ready to continue to the upside. So on the positive side is the fact that this small rebound pushed prices above the 55 week SMA, and it removed some of the bearishness of this candle here of the previous week. Also, some people on the web and a few analysts were again pretty fast to call this a bearish engulfing pattern here, this candle and this. And again, bearish engulfing patterns need another bearish candle to follow in order to be confirmed. So this pattern here is invalidated as a bearish engulfing pattern, without that meaning that we are going to continue immediately to the upside. To be honest, I'm looking for a reversal, a continuation of this correction, for a deeper correction, and then after we reach some of these levels here, the top of wave 1 and wave 4, we can see later a continuation of the bull trend. I wouldn't like to see that potential bearish continuation moving below this 1.2560 level, because that would change the long-term momentum back to bearish, and we will have to look for a different information here. Looking at the daily chart, we see all the internals of my of this expected large ending diagonal, and 1 2 1 2 1 2. I know those are 3 consecutive 1-2 waves, which is pretty uncommon. Also, this is a nested one, but the fact that despite the US dollar weakness, the pair didn't actually manage to close above the 21 day SMA increases the odds that we will see a continuation of this correction, possibly towards this SMA or a little lower than that. And after that, we will see the bull trend developing. This decline below the 21 SMA was a bearish signal, and the fact that there is a lot of divergence here and the RSI is resting at its neutrality level, it makes me believe that possibly we're looking for a larger correction. The RSI will move towards this trend line, and from here we're gonna see finally the bounce towards higher levels. Moving on to the New Zealand dollar. Yeah, this is a pair where absolutely follows my expectations for a strong rally from those levels. This is actually what happened. I projected this rebound here. It was a couple of weeks ago, okay, here. So after that, we only see bullish candles and pretty large ones, and we also finally see a close above all the weekly SMAs, which is something that we haven't actually seen since a very long period. And although we had a close here, the problem with this close was that we had a very small body compared to both the upper and the lower wicks of that candle. So basically, this is the first real bullish candle, which has a pretty big bullish body and small upper and lower wicks, which suggest that this is a legit bullish move. And this is the first close after above this SMA since 2014, August 2014, so about 3 years ago. Looking at the daily chart, we see, I'm gonna go back to the weekly chart for a little. I'm looking for a leading diagonal here, a leading diagonal for the beginning of this new bull trend, and we can see how this the internal waves of these leading diagonals counts. Then we have a triple three WXY correction and a strong rebound of this level here. So also we see that Friday's rebound occurred pretty close to the 144-day SMA, which seems to be providing support now. We had this as a resistance level here. We had a break above it, a test of the SMA to confirm that resistance became support, and then a rally, and a pretty strong one. So in terms of pure price action, this move looks really good as a potential new bull trend. Moving forward to the Canadian dollar, I was expecting this downtrend to develop a little faster than it did, and of course I said that we need a drop below this level in order to confirm this top here. But the previous week we had a continuation, and last week we had an attempt to move higher, but it was rejected, and a reversal that took out about 2/3 of this of the weekly bounce, and close with a bullish candle, but a candle that does not look very convincing for the US dollar bulls. Looking at the daily chart to get a better picture of what's happening here, we can see a 5-wave move here and a pretty complex correction within a large upsloping channel. The decline that dropped below the 55-day SMA, then all that period here was this SMA was trying to prove itself as becoming resistance from support. Here it was support, then we had the break of the support and a rebound that was testing the SMA for resistance, a little break above it for one day, but finally on Friday we have an intraday high that got really close to the 21-day SMA, a rejection here and a reversal and a close below this SMA. So basically this SMA we can assume that proved itself to be resistance, and I'm expecting the pair to continue to the downside from here. Also, the RSI shows bearish momentum. We had an attempt for a rebound from around the 30 level, and when it reached the neutrality level around the 50, prices were the momentum was rejected. This slight bullish momentum was rejected, and that reversal here sets the path for a continuation of this expected downtrend. If I'm correct, we shouldn't see a rebound above this level, and the downtrend should immediately continue from these levels. Moving on the Swiss franc. I was pretty clear on the previous video and my analysis during the last couple of weeks on this pair that the wave 4 correction was completed here, and that this was the beginning of a new downtrend. The break below the 55-week SMA was very important, because it was providing very strong support for quite some time, and then we had a drop below it, and we moved into the argument whether the 144-week SMA will hold. The first week after this break was a small doji candle that stayed below the SMA, but last week we finally had a continuation of the downtrend below this SMA, and to me this is a pretty clear signal of a bear trend continuation. Also, we see that the 14-week RSI is capped by a declining trend line, and it continues to build up bearish momentum here. Looking at the daily chart, we can see that the pair made an attempt to rebound, and I remember a conversation with some of you on our Slack group, and which we're expecting a new bull trend to start from here that will lead prices again toward parity. And I was uh, I was pretty clear then, saying that I don't see that happening because of this larger pattern that I see, and because of the strong decline here and the strong bearish momentum that I was looking in this pair. Then there was a poll on the fxtrade.com website, which most of the analysts were expecting a bullish reversal. But as it appears, they were wrong, and this is the continuation of the bear trend. Looking at how this decline develops, it seems pretty aggressive, and also we look that it is heading towards, that prices are heading towards a pretty strong support level, which is at 0.9550. But the fact that we are already pretty deep in this large candle wick, it becomes clear that at least this level will be reached pretty soon. That would push the RSI deep into oversold territory, and that would also mean that the momentum is getting aggressively bearish. So I discourage everyone from trying to buy this pair, betting on a bullish reversal to much higher levels. Although we must say that there is still such a chance, because if this count that I'm looking at here is, if this count is correct, actually I missed a wave 2 here. If this count is correct, we are looking at a leading diagonal here, 1, 2, 3, 4, 5 for wave 1, then ABC for wave 2, and then again 1 ABC with a failure here, and this must be the beginning of a wave 3. Because this wave 3 has to be very large, we already have 1, 2, 1, 2, therefore we're looking at a very, very big wave 3. We can eventually see something like wave 1, 2 within wave 3, and then a continuation, but I seriously doubt that there will be enough strength for the US dollar to make such a reversal. So moving forward to the Japanese yen. Here we're looking at the weekly chart. I put that trend line here because it's pretty interesting. We see how this trend line that actually does not show any trend respects some important support and resistance levels here, then here, for all that period, and after here on this decline, it was 1, 2, 3, 4, 5, 6 weeks of support here, and this week was a break to the downside, 2 weeks of resistance and a continuation, and after that it was the same trend line that proved to be strong resistance for 1, 2, 3 weeks. I'm not counting this one. So after that we had a decline, price is found support on the 55-week SMA, a rebound, resistance, and a reversal. From what I see here, and also in the RSI, which seems to be capped by a declining trend line too, things look pretty bearish to me on this pair. I'm looking for a continuation of this downtrend. We may see some kind of support around this level because here we had a gap, and usually when prices come back they fill the gap and they post a reversal after that. So I'm gonna go now to the daily chart to see a better picture of what I'm saying here. Here is the gap. There was a gap. Actually, there is no gap on Forex, but it is that the rebound actually happened during the weekend, where most, if not all, Forex brokers are closed. So when we opened, there was this price gap here. Some brokers prefer to artificially fill those gaps on Forex pairs, some others just leave them as gaps. So by the time we reach this level here, we may see a rebound, but I believe it's going to be temporary, and then the downtrend will continue from there. Looking at the internal waves of this choppy price action that follows this decline, I can count 5 waves to the downside from here, then an ABC, and then 5 waves from here, and this should be an expanded flat correction, A, B, C. So we are, if this count is correct, we are already challenging the low of wave 1, and once this is broken, this should accelerate and move in a very aggressive manner to the downside. Looking now at the daily SMAs, I see that after this decline here, the 55-day SMA is acting as resistance, and it proved to be resistance exactly on Friday. We also see here a potential bearish engulfing pattern between the Friday candle and Thursday candle, but again, I'm gonna keep saying that engulfing patterns needs the following candle to be at the same direction as the pattern in order for the pattern to be confirmed. So what we need is on Monday another bearish candle, and that will confirm this this bearish engulfing pattern, which also, if gets confirmed, will give us a lot more confidence to this count and to this continuation of the downtrend. Moving on gold. Now, I haven't really made a lot of changes to this weekly chart, and my primary concern with this count is this large correction since 2011, which I count as 1, 2, 3, 4, 5, and therefore this should be A, B, C, and then a continuation to the downside for another 5 wave move. My concern with that is that that would imply a very strong bullish reversal for the dollar, which at this point I'm not very confident into. So I'm also looking at an alternative way to count these waves here, and that would be A, B, and then something like 1, 2, 1, 2. So this red 1, 2 waves will have to be here, 1, 2, and the blue ones should be 1, 2 here, and this whole thing should be A, B, C green. If that's true, then we are looking for a new bull trend from here, and that should be 1, 2, 3, 4, 5 towards I don't know, probably around $3,500 per troy ounce. So I'm not very concerned about the correct way to count this for now, because obviously we are looking at the weekly chart, and a lot of things can change as these candles here develop. It will take several years for this to develop. What I'm interested in, though, in this chart is the fact that prices hit strong support on the 144 week SMA, and after that we have 1, 2, 3, 4 weeks of bullish price action. And also it is important that after the previous week we broke above the 55 week SMA, this week we have another bullish candle here, and that is probably a sign of this new bull trend getting on track and having a little better traction, let's say, moving faster to the upside. If we zoom into the daily chart, this is the way I am counting there. I just missed another wave B here. I know this ABC looks a little odd, but because of this triangle here, this cannot be 1, 2, 3, 4, 5, because triangles cannot be on wave 2. We cannot also look at this as an ABC for wave A and B and C as a 5-wave move, because this is a zigzag, and zigzag corrections have the formation of it must have a structure of 5, 3, 5. So I'm looking into a 333 correction, which would be ABC for W, ABC for wave X, ABC for wave Y. So this is the end of wave 2. I just don't bother putting wave 1 and wave 2 here for the reasons I explained on the weekly chart. And we're looking here at something like 1, 2, a small wave 2, and 3, wave 4, a large wave 4, and another 1, 2, 3, 4, 5 for wave 5 within wave 1. Here now, because this decline here counts perfectly well as a 5-wave move, this cannot be a correction all by itself, so it must be wave A. This rally counts pretty well as a 3-wave move, like A, B, C, so it cannot be wave 1 of wave 3. So let's say to have something like 1, 2, 1, 2. So I'm looking into this in this manner: A, B, C. Where wave B overthrown the high of wave 1, and wave C failed to make a lower low for below wave A. This type of a correction is known as a running flat, and it is pretty rare. Because of that, I am a little concerned about this count. We don't get to see a lot of running flats, and especially on daily charts. So I'm not very confident on this count yet, but in terms of support and resistance, I see that this decline found very strong support here on the 144-day SMA, and this rally that followed was pretty strong. We had a break above the resistance of the 55-day SMA, and then it held very well as support, and we have here a continuation of the bull trend. Also, looking at this from an intermarket analysis point of view, we see that uh, my expectations for stronger gold support my expectations for a weaker dollar, and because we know that there is historical inverse relationship between those two instruments, and also there is some kind of fundamental reason behind this inverse relationship, and that's because uh, gold is considered to be safe haven, and the US dollar is the worldwide currency, and also it is considered to be a safe haven. So while one goes up, the other should go down. Otherwise, we cannot have, you know, two safe havens at the same time. Anyway, my point here is that looking at a pattern that suggests stronger gold, while I'm looking at a pattern that suggests weaker dollar, makes me feel better about this formation here. Now I'm gonna move on to crude oil. Crude oil, on the weekly chart, there's really not much to add except from the fact that we had a reversal below the 55 week SMA, which is pretty bad for my bullish expectations for the instrument. Actually, since my previous video where we had this strong bullish candle here, the previous week we had a continuation to the upside, but a pretty strong rejection at the 144 week SMA, a reversal, but then the 55 week SMA held as support. What happened last week is that we had a strong decline and a close below this SMA, which is something that I don't like. Before we get into a scenario where we will be looking for a larger wave 2, I would like to give it more time, possibly another week, the coming week, to reverse back up. If it doesn't, then I will have to look for an alternative way to count this, possibly this being only the first part of a correction. You know, because this excuse me, because this correction counts pretty well as a wave, as a three-wave move. This could eventually be the first part of a triple three correction. So instead of having ABC for wave 2, having ABC for a wave W, and then a wave X, and then another ABC for wave Y before this wave 2 is actually complete. We're gonna need more time and more price action in order to confirm those scenarios. I'm gonna go to the daily chart to see the internal moves, and you can see here what I'm talking about. Here we have wave 1, wave B, wave C. This rebound, I'm looking and this is part of the reason why I'm not publishing lower time frame charts for now, is because you know, I need more time because of my recent medical condition. I need more time to go through all the smaller time frames, not only H4 or H1, but also 30-minute, 15-minute, to be completely sure if this is 1, 2, 3, 4, 5, or if this is something like 1, 2, 3, 4, 5 for A, B, C, you know, and then this is another continuation here for this being a wave X. But from what it looks like, it seems that this is a 5-wave move to the upside, and this is just a large correction, A, B, C, that it's probably already finished, and we're looking for a continuation from here. In terms of Elliott Wave analysis, a break above this level I mean, a continuation of this small bounce that occurred on Friday that will push prices above 50.27 or 50.50, let's say, will give us a lot more confidence on the scenario of a completed wave 2 here. Moving on to the S&P 500, my favorite instrument, we see that when I created the previous video, we were at this point here, and I mentioned that this is not the beginning of a larger correction or even for the beginning of a reversal to the downside or anything like that. It is just a temporary consolidation before the larger trend continues to the upside, and this is actually what happened during the last couple of weeks. We're moving higher. There is practically nothing to stop the S&P 500 from moving towards I don't know, possibly the 3,000 mark. Looking at the daily chart, I'm trying to count the waves inside this move. Possibly this is the wrong way to count it. There is a great chance that instead of this being 1 2 1 2 1 2 3 4, this could be something like I don't know, 1 2 and wave 1 red being up here, and this wave 2 and an even stronger bull trend from here. It is difficult to find out whether this, when after this 1 2 you see a 5-wave move, it is difficult to define the degree of the wave, whether it is a wave 3 or it is just another wave 1 of a lower degree. From what I see on the weekly chart, and if this count is correct, 1 2, if I plot a Fibonacci expansion tool here in an attempt to project the length of wave 3, which is usually more than 161.8% of wave 1. It is usually this big, so we are looking for a continuation of this bull trend towards this level here, 3065, and therefore there's a great chance that this thing here is just wave 1 red, wave 2 red, and this is wave 3 red that will push towards this level here and possibly higher. At the current point, I can only be bullish and expect rebounds on every touch of those SMAs. The same holds true for the German DAX, which appears to be even more bullish than the S&P, even if that sounds crazy because S&P is already very bullish. Again, it was here when I created my previous video. Unlike the S&P, which posted 2 bullish weeks, we had a correction here in DAX, but last week we had a pretty strong rally. We are moving into new all-time highs, and the RSI seems to be very well supported by a rising trend line. And even though we are getting into overbought levels, this is only a momentum indicator, which points to the fact that we are deeply into bullish territory. It does not mean that we're gonna see a trend reversal just because the momentum seems overbought. There is nothing overbought in this market. Looking at the daily chart, again, it is very difficult to be confident in this count. I mean 1, 2, 3, 4, 5, because it could easily be 1, 2, 1, 2, 1, 2, or even this whole thing to be a wave red, a wave 1 red here, and a wave 2 here, and this could be a wave 3. So while it is difficult to decide on the correct degrees of the waves, we're pretty sure that what we're seeing here is a strong bull trend, and we should expect prices to continue to the upside. I wouldn't be concerned about this gap here, because as you can see in previous price action, here we also have an unfilled gap. I mean after it happened, because obviously it is filled here. So it can take a lot of time, possibly months, before these gaps here get filled. So at this point I wouldn't bet on a reversal to cover these gaps. We can see this trend to develop towards much higher levels before we have a much significant correction that will close those gaps. Well, at this point that pretty much completes my my view on weekly and daily charts on all the instruments that I cover at snell-trading.com. If you have any questions, feel free to post some comment or start a discussion in the Slack group. Thank you very much for watching, and I wish you a profitable week. Goodbye.